Today I want to talk to you about how to get ready for the end of the financial year, the TMAT way. See, there's a list of things that you can claim as a property investor. I'm going to go through each one of those today and tell you what you should be claiming and how you stay on top of it, right? So the first thing in Australia, the largest expense for any property investor is interest charges. The Australian government allows you to claim back every dollar of interest that you pay on an investment property. So where do you get the interest charges from? That's on the bank statements from the home loan for your property investment. So make sure you keep those. Next one is depreciation. This is the second biggest. In Australia, the government allows you to claim the depreciation of the asset against your income. So you can claim back the depreciation. So how do you do that? You get a depreciation report done. Guys, this is one of the best investments you can make. It's a few $100 and you can claim it over a long period of time in terms of the depreciation schedule. So that's a great thing. If you haven't done that already, reach out to TMAT and we'll help you to get it done, guys. We'll point you in the right direction. Number 3 is your land rates and your water rates. Now your land rates, you keep a track of those from your rates notice that you get from council. And the second one is the water rates. Now keep track of those from your water bills. Now what I tend to do is I get those directed to my property manager. The property manager receives them and then they just pay for that stuff out of the rent. Nice and easy, super clean, and then you can just get them to send them over to you. Number 4 is insurances. Nice and easy to track. You just got your insurance policy. Easy peasy. Number 5 is any repairs. So if you get a phone call throughout the year and they're saying to you, hey guys, the tenant reaches out to you and they're like, hey, the tap's leaking or there's something wrong with the air conditioner, and you repair that, make sure you keep the receipts because you can claim that back. Number 6 is property management. The good thing is property managers will send you across an end of month statement. And the cool thing about that is the end of month statement shows you the expenses that you're paying to the property manager, but it also shows you the income. You have to show the government what income you're getting from rent for the property. So that's 2 birds with 1 stone. Now, some of them will send it via email at the end of each month, but some property managers these days also have like an online service which you just log into. You can download all the reports. Easy peasy. If you're a Teach Me About Property student who owns a co-living property, there's 4 additional items that you can claim. So number 1 is furniture. With co-living properties, you tend to rent them out fully furnished. So all of the furniture that you buy, you can claim that back on tax. Make sure you keep the receipts. Number 2 is the internet. You're gonna pay for the internet, so make sure you keep those internet bills. What I do, I get them directed to the property manager. They pay them, they send us the bills once they're paid. Next is the power bills. Make sure you keep your power bills. You'll claim them back as well. Sometimes they're a bit high, so you definitely wanna be claiming those back. And the last one is maintenance. So unlike a standard rental with co-living, you'll get the lawns done and you'll probably have a cleaning service that gets done semi-regularly. So make sure you keep those. They normally go as part of the property management end of month statement, but make sure you're tracking those and keeping those receipts. So here's the pro tip. Now you know what you can claim. How do you make sure you make your life easy come tax time? Well, what I do is I've got a hard copy folder and I've got a folder on my desktop on my computer for each of my property investments. And what you want to do, because some of the bills come hard copies, sometimes you have physical receipts, and so you need a hard copy folder so you can put all that stuff in the right place. But most of the stuff these days is online, it's digital, so just make sure you've got a folder, you can drop all that stuff in and guys, do this as you go month by month, so tax time is easy breezy. All you need to do is share those folders with your accountant, send them over, nice and easy, and all you have to do is wait for your tax return to land in your bank account.